To kick off 2025, I thought we'd talk about a topic that never gets talked about on YouTube, SCHD. All right, hear me out, guys. Many regard SCHD as the greatest ETF of all time. But if it's so great, why did it only go up 7% in 2024 when the overall market was up 24%? That's over 3 times the underperformance. Well, the obvious answer is because the S&P 500 is 500 different companies at different weightings, well, SCHD is only 100 different companies at different weightings with different stocks. Like, that is the actual answer. You can stop watching now if that's all you wanted to hear. But I know you wanted to know if SCHD will do well in 2025 and beyond. Well, the answer to that is, it depends. You see, SCHD, they track the Dow Jones US Total Stock Market Index. It has many criteria to even get put up in the index. So let's take a look at this article on Seeking Alpha by the Barnacle. So if we go down here, guys, it's going to be tracking the Dow Jones US Total Stock Market Index. And then it uses algorithms and metrics. There's no individual stock picker, a man behind the curtain. There's nobody putting their emotion into what companies will make up the fund. It's all rules-based, but do not let this scare you. I know some of you might think, oh, I might do better if somebody was manually picking and selecting the funds, but study after study shows that passive investing, time and time again, beats actively managed funds, and SCHD is passively managed. And being passively managed leads to a low expense ratio. SCHD's expense ratio is just 6 basis points. That means for every $10,000 you have invested, you are only going to be paying $6 in fees. That is super cheap. This means the fund costs very little out of your own pocket to own, which means even more profits for you, the investor. So what exactly are they looking for? They are looking for high quality companies and highly sustainable dividends. What a great combo. You will notice that I said dividend and not dividend, because they are actually paying investors money from the goods or services that the company produces and earns, and then they send that back to the shareholders. This isn't just paying people back their own investors' money and calling it a dividend like many other income-producing funds are doing these days. SCHD also gets reconstructed every single year. So every single year, they are constantly picking the 100 best companies to put into this fund. Remember, it's all rules-based and algorithm-based. It is not somebody individually stock picking. We're getting exposure to many different sectors. It's very diversified. And when they use their criteria, they are putting extra emphasis on a history of paying dividends and strong company fundamentals. This is why we have great holdings such as Pfizer, BlackRock, AbbVie, Coca-Cola, Cisco, right? All these companies make goods and services that people use every single day. They are very profitable businesses here, and they're gonna send that money to the shareholders in the form of dividends. We're also gonna get some capital appreciation when these companies become more and more valuable. This is a way to get both income through their high yield of around 3 to 4%, and I don't care what anybody says, SCHD giving around a 3.5% yield. That is pretty high yield, in my opinion, because I look at sustainability, and it's also giving out long-term capital appreciation. Again, guys, best of both worlds with SCHD. But again, guys, SCHD has underperformed the overall market in 2024. So how can we trust it in 2025? Here's how I look at it. SCHD is not built to beat the market. Nowhere in the prospectus does it say, hey, just own this fund, and every year you will get guaranteed returns that are greater than the overall market. Instead, SCHD is the dividend complement to a portfolio. There are so many other great growth ETFs out there. Now, a big reason that SCHD lags the overall market is that they don't really have that much exposure to tech. We can see it only makes up about 11% of the fund. In many other popular growth funds, tech is way more than 50% of the portfolio. So tech is where the huge gains in the market are coming from, but that doesn't always mean it's going to come from there. There's going to be years where other sectors will do better than tech. There's going to be years when tech really lags. In that case, SCHD might actually outperform. So the way that I use SCHD is not just to put 100% of my portfolio in the fund, but instead I just hold SCHD as a certain percentage of my overall portfolio. I know that I will get a fantastic basket of stocks that are constantly providing goods and services that people will need. I don't need to worry about what Bitcoin is doing or some hype invention that might never come out. It might never come into fruition. I follow the KISS method. Keep it simple, stupid with SCHD. I just buy a little bit when it goes up. I buy a little bit when it goes down, and everywhere in between. I want to show you guys that I actually put my money where my mouth is. After SCHD's totally not needed stock split, I now own 187 shares worth about $5,100, and they pay me just under $200 a year. That is money that I did not need to work for and is coming into my bank account every single quarter, potentially for the rest of my life. Of course, the more shares of SCHD that I own, the bigger those dividend checks will get. So will I be buying in 2024? Absolutely. I do not buy SCHD to outpace the market. I have so many other great investments in my portfolio that do that. I buy SCHD because I love getting paid passive income every single quarter for not doing anything, guys. It is such a great feeling. I just went on vacation and I was looking at my Fidelity portfolio during the vacation and I couldn't believe how many dividend checks I was getting that I could spend on more fun and exciting things. This is exactly what I want my retirement to look like. So many stocks and funds, you have to worry about if the company will exist or pay dividends in the future. Is that really how you want your retirement to look like? Having to worry about not having money to pay bills? With SCHD, unless 100 different companies all fail at once, which we'll probably have much bigger problems if that happens, we will always be in business with SCHD. SCHD has a good track record of success. Let's take a look at this, guys. It's been out since 2011. Hard to believe that was now almost 14 years ago as we enter this new year. 220 divided by the 13 years SCHD has actually been out. We get a return of about 17% in capital appreciation every single year. That is truly amazing. It's survive some market downturns. I'd say it's pretty safe to say that SCHD is time and tested at this point. And of course, we're also getting that sweet dividend yield of around 3.5% every single year as well. That's just the cherry on top. Now, I will say that in recent years, SCHD's growth has really slowed down. It's up only 41% in the last 5 years. That's definitely way behind the overall market. That's only about 8% every single year. But hey guys, as long as I get my money in the form of dividends and my principal isn't going down, right? I don't want any NAV erosion. And my money is outpacing inflation in retirement. That's what I care about. Plus, SCHD is constantly paying out those dividends. Let's take a look at their dividend history because they have a very impressive track record, right? We can see they have been paying out dividends since 2011 when they first got started. Ever since 2011, they have paid out quarterly dividends. This includes times when the market was up. This includes times when the market was down. It also includes that infamous COVID-19 years from 2019 to about 2021. But here's the best part, guys. Just holding on to this fund, if we go to the dividend growth, we can see that every single year, they are just giving around a 10% raise from the amount of dividends that they paid out most recent year. This is truly incredible. Getting a 10% raise for doing absolutely nothing. Your work, they might not give you a pay raise. They may give you a 2.5% raise and a pizza party, but SCHD, they are actually looking out for you. SCHD is just a buy and hold forever ETF. I love being able to sleep well at night, knowing my investments are working hard, so I don't need to. As much at least. Did you know in 2024, I beat the stock market by 10%, and I've continued to outpace it the past 3 years. Check out my full $220,000 portfolio in the Patreon link below, and you can get access to all my weekly trades. We're going to make 2025 another great year, guys. Be sure to hit that like button. Let me know if you're buying or selling SCHD in 2025, and I'll catch you on the next one.
Oh, I got some cookies, so thank you. Oh, so good. My wife did a great job. Awesome job, honey.